Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, we're going to do an update to the Las Vegas real estate market.
Mm-hmm.
So we're just going to jump right in to the data because it's super good data. We'll go over to real-time market profile here. The first thing that's interesting on this is the median price of new listings on December 29th was $450.
Wow.
Okay. Today it's $490.
Okay.
Now, this is not, this does vary.
It does.
Some variance.
Right. So remember, a lot of the reason why we have such a huge swing is because we have such limited inventory. So because we have limited inventory, if a few houses on the high end come on the market, that skews the whole picture.
Yeah. Yep, that's exactly. We've talked about this. The other problem with median price is it doesn't reflect the types of homes. Mm-hmm. So this could just be more bigger homes came on the market.
Sure.
It doesn't mean that home prices went up 40,000.
Right.
Now, what does actually show that home prices went up is this median, it's price per square foot. Friday, December 22nd, it was $258. It's $262. Mm-hmm. So it's basically up darn near 2% in a month, less than a month.
Right.
That's pretty unusual. Is now home prices normally go up in the spring.
Right. So
that's kind of a big jump. Maybe we're going to track this every week and see what this does.
Right. Again, I think it has to do with the mix of homes and with such limited inventory that a few homes that are more expensive coming on the market skews these numbers.
Right. Yeah, I think so. So the rest of the data on here, if you look down there, is pretty mostly benign stuff. Some more homes were relisted. That's good because we do need some more inventory. Price increased 5% and price decreased 36%. Those are probably in line with historical.
Mm-hmm. Sure.
Right. Okay. Now we're going to jump over to price per square foot. Now, people say when they look at this chart, they'll be, it's just been crazy in Vegas, so much volatility. Actually hasn't been very volatile. If you look at the dots, which is the same day for the last 5 years, basically, the market steadily increased. We have that bump, which was strictly a panic to buy houses when interest rates, when everyone knew. Like this is a perfect example of if I told you. If I told everybody when interest rates were 3%, they'd be 6% in 3 months. Literally, every house in the market would get bought. People would bid it up. They just want to lock in that low rate. And that's exactly what happened. That moderated back to the trend line, you could basically say. And we're just basically back on the normal trend line. Right?
Absolutely.
Yeah. But you can see at the very end of this little pop. It's hard to see on this chart, but the little dot is above the line. That's because it's gone up so rapidly just in the last 2 weeks. And you'll look at this dot. Remember, that's basically middle of January for the last few years. And you'll see that home prices went up each of those years, including 2022. Home prices went up for the whole year. You can see we're up actually every year. We're actually up from 2022 to 23 year over year. Price per square foot on the same date. Inventory basically stayed the same. It didn't drop. As you can look at the chart every year, it's still dropping, but it's a little misleading because we're historically super low. So why is that a good sign that inventory is not continuing to drop? Or do we get to a point where it really can't drop?
I think we're at that point.
Okay. And why is that?
I think we're at that point where it's so low that it really isn't going to drop anymore because it really has nowhere to go. There are just so few homes on the market. And then, to your point, it is good because it means that maybe we've hit bottom for our inventory. So that would be nice. And we'll start getting some more inventory and people will have more choices. Sellers will be able to move forward with their plans. Buyers will be able to purchase homes. So that would be a good thing.
The next chart, property with price decreases. Whenever this is high, that means the market is slow. People are having to drop their list price. You can see historically we're basically still probably a hair above average. If you look at 21 to 22, that was really historically super low. The bottom line on this is that bottom line is not zero, it's 10%. So, but you can see we're much lower than we're lower in 2019 substantially, which is probably the last normal market. And we're lower than 2020, which was pretty much a normal market. And so here we are. What does it mean when less people are having to decrease their price?
Well, it means a couple things. First of all, it means that people have their list prices are in line with market value, which is a good thing.
Okay.
It also means that it's a pretty well balanced market, right? I mean, sellers are listing at an appropriate price. Buyers are willing to pay that price. You don't have a lot of volatility, a lot of spread between ask and purchase. So it's a nice consistent market. But it also means, going into the spring, I think it does speak of a market in the spring that is probably going to favor sellers.
Yeah, I agree. Right. The market action has basically been pretty benign. It's just kind of chilling out. I think it's going to get to be a hotter market in the next few months. Anecdotally, we said this on a previous video. We literally have 3 investors who out of the blue called us like on a day or 2 days.
Yeah, within just a couple of days of each other, yeah.
All want to buy more houses.
Yeah.
Right? It's time to buy. And it's interesting because it's not like there's a huge supply of homes that you have choices. You can go out and make offers. Like I remember the day when we would go out and make offers on 10 houses in a neighborhood that were just a ton of houses and lowball everybody just to see who would, sell it cheaper.
Right.
Right. You can't really do that today.
No. And it's not just Vegas that is in that situation. That's in a lot of different markets. I spent some time in Washington over the weekend, and it was the same thing. Like there was a town that just south of Seattle where there were a total of 14 listings. Woo! I mean,
and it's a big town. It's probably 100,000 people.
Probably. So I mean, 14 listings is not a whole lot of choice. So that just lets us know that this whole inventory problem is not just anecdotally in Vegas and throughout the country, but when I go someplace and I ask agents, hey, what's going on in your market, that's what I'm hearing. So I think it's an interesting thing. I think it's going to be a robust spring in most markets where there's been a lack of inventory. I think that just like here, properties. The ones that are selling are the ones that are desirable. The ones that are not selling, they're the ones that are undesirable. But and that I understand that happens in every market, but in this particular market, there's a lot more sensitivity to that because the numbers we're dealing with are so much smaller as far as the amount of inventory.
Here's the market segments. Now, you've seen this chart before. You know what it is, but I'll go over it. So those 4 lines, they're the 4 quarters of the market. So you have the top quarter, the second quarter, the third quarter, and the bottom quarter. This is by price. And then all that median price is the middle of that quarter. So if the top quarter is from 0 to 25%, then this is 12.5%. And if it's 25 to 50, that's 37.5%, right? So that's just what the house, and a lot of people criticize and go, Todd, there's no way it's exactly 640. That's a made up number. No, it's not an average. It's a median. So what a median means is they took a bunch of houses and they knocked off the top and bottom, and they kept doing that until they got to the middle number. So now if the person had listed their house at 643,988, then that would show that. But that's not what it shows. It shows that they listed, actually all of these are listed on the evens, 125, 640, 475. And I think these were actually, these might have been sale prices. But what's interesting is, last week when we did the update, there were more absorbed than new by 2x.
Right.
Okay. It's sort of chilled out a bit. So in the top quarter of the market, 40 new, 49 new listings. Some of those were probably yours, right? Yeah, you guys had some listings. Only 34 were purchased. And then in the next quarter, that $640,000 quarter, 60 new listings, 60 absorbed. Now, it doesn't mean the 60 houses when the market immediately sold in the last week. It just means that 60 in that price range went on, and 60 that had been on for varying degrees of time came off. And then in the next one, 89 new, 77 absorbed. Then the bottom one, 95 new and 100 absorbed. And you can obviously see the days on market is less when you get in the lower price ranges. Why is that?
Well, because in the lower price ranges, you're dealing with a variety of buyers. You're dealing with first-time buyers, you're dealing with investors. So it's just a bigger buyer pool.
Yeah, it's a bigger buyer pool, more people. There are probably people who said, okay, let's go buy a house. And then they realized they're not going to get a 3-bedroom in Summerlin, because that's $650. And they're like, oh, we can't afford $650. Let's just get the 2-bedroom in Spring Valley that was built in 1972. It's $380, but it's a house. It's 1,400 square feet, and it's a house. And it's old, and it's not in the neighborhood we wanted to be in, but we can afford it, right? We can swing it. And whatever. I mean, that's a decision people make all the time, right?
Sure. Well, no, look, we all make those decisions with everything in life.
And the other thing is, people tend to think, "Hey, this is completely ridiculous, Todd." Well, go to I forget what the market was, but someone was telling me they were buying a house. It was Denver, and they were buying a house for like $500,000. And I go, "Oh wow, what kind of house is that?" And it was basically like a condo, and it wasn't even in a super great. It was kind of the south part of town. It wasn't a great area. They were looking at this condo, and I'm like, "Oh well, it's Denver in that market. It's okay now." In San Diego, maybe you can buy a condo for $500,000 in certain parts of town.
Sure.
We looked at a house that was 3 bedrooms, built in the 50s. That was only 1,400 square feet. That was $1.1 million, and it was not like, when you looked at the outside of the house, it looked like it was built in the 50s, right? But what was interesting is that whole neighborhood that this house was in, there was nothing for sale. Like, if you drew a mile ring around, there were just a couple houses for sale. Everything there is selling super quick. So if people are willing to pay 1.1 million there, certainly they'll pay 400, 500,000 in Vegas, right?
Well, it's a different market, and remember, wages are different. It's a completely different market. So it's not really fair to compare those.
Okay, 2 more things, and we'll wrap up the video. The one thing is this rumor going around that prices in Vegas are going to drop 1% a month for the next year. First of all, how would anybody know? Like, why 1% a month? Like, those are surprisingly round numbers. Like, 1% a month for 12. Like, somebody made that up and spread it. Like, what's that based on? Because we just saw the home prices in 3 weeks go up $4 a square foot, which is about almost 2%, 1.5%.
Look, will home prices go down in Vegas? The answer is yes. Will home prices go up in Vegas? The answer is yes. Okay?
Yeah.
I mean, yes. Yes to both. Are they going to go up simultaneously, up and down simultaneously? And the answer is still yes.
In some parts of the city.
Right, because remember, real estate is hyper-local. So, this is not rocket science. Real estate, particularly residential real estate, is hyper-local. So you can have, even adjoining streets that one goes up in value and one goes down in value for a variety of reasons. So, you need to look at a lot of different factors in order to consider what values will do. That's the reason why we look very specifically at one section of the Vegas market when we do these updates, so that we can determine long-term trends. We're not interested in one particular zip code, because that doesn't give us sufficient data to be able to analyze long-term trends. By looking at a good section of the city, that allows us to see a long-term trend and share that with you.
And when we did look at Henderson, North Las Vegas, they're acting just like Vegas.
Right.
The same thing. Low inventory, prices going up.
Sure.
Basically doing the exact same thing.
Right.
The next thing is this theory or myth that the new home builders in Vegas have all these homes they've built that haven't sold, and they're just sitting waiting to release. They haven't released them yet. They've been building them for a couple years. They're just sitting out there, empty houses. And I don't know why the new home builder would build a house and not even try to sell it, just sit on it. What you happen to know a lot about this because you've been talking to the builders recently.
Yeah, so I've had a good time recently, and gone to speak with a number of ultra high end builders here in Vegas, and it's
Four Seasons
and
$6 million for a condo,
amongst others.
Okay.
Yes. And without naming names, because some of them do not want to be named, because they have what they call a whisper campaign.
Okay.
So we are not allowed to name names of
Won't
communities.
say their names.
Okay. But so let me give you an example. So there's a community that's going to be coming up out of the ground. It's in Summerlin. It's a massive community. If you are familiar with the luxury end in Vegas, think the Ridges, think the Summit, think that sort of community, right? Not quite as high end as the Summit, but maybe a little more interesting than the Ridges, something in between that. And I was chatting with somebody from the builder, and what I was being told was they just have a whisper campaign. They don't have pricing, and they already have almost half a parcel, so only half a parcel that they are right now looking at developing. And out of that half a parcel, they will probably only release half of that.
Okay.
And this is not a lot of homes, guys. So don't think like in the dozens even, okay? Very few. And they already have reservations for a good portion of them. And these are like sight unseen, just the lots. The lots are multi-million dollars.
Just a lot.
Just a lot.
Yeah.
And it's people are interested. People are interested in Vegas. So new home builders are not struggling, okay? They're just not. It's the same thing going on the south side in Henderson. To your point, you mentioned that the Four Seasons. The Four Seasons is going to be coming out of the ground soon. And they're doing the same thing. They haven't even poured a slab, and like 30% of the units are sold.
That's crazy.
Yeah. And again, those are multi-million dollar.
And they're condos. So you don't even, all you can do is they'll say, hey, you're going to be on the 5th floor.
No, I mean, they've got full render. They've got the whole thing.
Well, they got renderings, but they don't have anything built.
No.
You can't stand in the unit and look.
Oh,
they
no,
just have, this is what it would look like from your unit.
The only people who will be standing in the unit are the owners, because everything will be sold well before this thing is.
Yeah.
Because I mean, again, same thing. They just started opening it up, and people are so hungry for new developments. And it's not just in the high-end market. I mean, I'm giving you these examples because they're kind of sexy and I like them. But it's the same thing if you're talking about Lennar. It's the same thing if you're talking about Pulte. It's the same thing if you're talking about, just track homes. It's the same kind of thing. I mean, do they have inventory? Well, yes and no. They have inventory to sell you, maybe, depending on the community. But most of the time, what they have is maybe a couple different properties, and everything else they haven't even released. So builders have gotten really good at this, and developers have gotten really good at this. They release in very small packages, and they sell that, and they build that, and then when they're almost done building that, then they release the next few, and that sort of thing. So they're doing that for a number of reasons. So let me give you an example. So let's say that you're in a community, and you're going to be putting out, let's say, 50 homes in a community, right? Okay. So you're going to be putting out 50 homes, and maybe you are going to release homes in 4 home batches, okay? So every time you release 4 homes, what happens? The next 4 homes are going to be released for more money. Now, so what you're doing is you're metering out how you're controlling how many homes you're releasing, you're controlling your pricing, you're controlling your cost for developing those homes, you're working with smaller crews, you're actually more profitable, because builders have gotten very good at being profitable, and we've talked about this a lot.
So if you build a house and nobody buys it, that's not profitable. It's all cost. So just the fact that every home builder in the U.S. has reached the highest profit it ever seen in 2023, predicting the highest profit they'll ever see in 2024, be the 2 record years for new home builders. That highly makes me doubt any anecdotal information that there's all these homes sitting around.
They're not.
That haven't. If that's the case, then they're going to be ridiculously profitable because they've already built the home, and now when they sell it, it's all cash.
Well, not only that, but they're sold already. I mean, yes, are there homes out there? Yes, but they're sold.
Yeah, they're sold.
They're waiting on, finishes like cabinets or flooring or whatever finishes that they're waiting on, but they're sold. I mean, they already have a buyer on the hook. The buyer's already put money for their upgrades and options and all that. So it's not like, yes, these homes might be sitting there, but they're sitting there with a buyer that's already put down a good bit of money.
Yeah, there's no shadow inventory of new homes.
No.
It's just like the shadow inventory we heard about in 2013 that never happened. None of these, the foreclosures that were the banks were, JP Morgan was going to dump, Goldman Sachs, all these foreclosures, millions of them. No, nobody has them.
Right.
They don't exist. It's a fantasy.
Right. I mean, and it's not that we don't see any foreclosures. We do. Okay, so please understand, no matter what the market's doing, there will always be foreclosures for a variety of reasons, and we've talked about that. But that doesn't mean that those foreclosures actually move the needle, because those are not necessarily representative of the market. They are just a natural part of the market. So, you've got properties that, somebody's died, or there's some extenuating circumstances, but, somebody just not being able to afford their home, those foreclosures are few and far between, because remember, it takes so long to foreclose that people have time to sell the property if they wish, to make up the payments if they wish. So somebody who gets foreclosed, generally speaking, that's a choice.
Yeah. In 2008, great financial crisis, that whole time, about 3 or 4 years, 60% of all homes on the market were either bank-owned or short sales.
Right.
In Vegas right now, it's less than 1%.
Right.
Less than 1%. So we have 1/60th the amount relative that we had then.
And even then, most of those were, again, they were choice. Because remember, people, we got into this spiral to the bottom. So people were looking, going, hey, I owe this much on my house, but the house next door is just like mine and selling for half the money. Why am I doing this?
Yeah.
So those were not people who had lost their jobs, or those are not people who could not afford their homes. They could afford their homes. They had no problem making the payment, but they were choice.
Right.
And people are not making that choice today because they have a lot of equity and they would rather sell the home and put the equity in their pocket.
So what you're saying is we're going to have a pretty hot spring.
We're going to have an exciting spring. I've said that all the way along.
Okay.
I think this is kind of the calm before the storm.
Okay.
I think that, come, sometime in February, we're going to see a lot more excitement. And, the crescendo is probably going to come around April.
Okay.
And then, it's going to peter out by June, the way it generally does.
Nice. I'm for it.
There you go.
Right.
So what's going on in your market? If you are in Las Vegas, tell us what you think. You don't have to agree with us. You just have to tell us what you think.
If you have a house to sell in Las Vegas, give us a call.
Yeah.
We'll come out and talk to you about it.
Yep. And, in particular, no matter what part of Vegas you're in, we'll be happy to have a chat. We may even have a buyer for you because, like we said, we've got investors who are chomping at the bit to buy something. It doesn't mean that they're willing to pay over market value. It just means that they would like to buy something that makes sense for them.
And if you're already listed with an agent, it's not a solicitation. Stay with your agent.
Absolutely. Your agent will do a great job for you.
Yep.
There are great agents in Las Vegas.
Yep.
So remember to leave us your real estate related comments. Like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.